All right, let's put the spotlight then on private equity firm Lighthouse, which has just pumped in close to 284 crore rupees in fashion and silver jewellery brand Kushals. Let's find out what these funds will be utilized towards. Manish Gulecha is the co-founder of Kushals, now joins in. Manish, congrats on the fundraise. What will it be deployed towards?
Most of the funds we would be using for our physical store expansion. Today we are standing at 76 stores, and we are looking to expand to about 300 plus stores in the next 3 to 4 years. And partial will be investing into technology part. There is a big area to play in the digital play side as we grow this brand into a strong omni-channel brand. So we'll be making significant investment in technology and partial in people, merchandise, design. This is where the investment will go, and significantly also on branding side.
Right, and given the kind of Gen AI push that we're seeing for retailers, both online as well as offline, that they're undertaking, how much of the fundraise will be directed towards enhancing your AI offerings?
Definitely, I think we are in an era where technology has to be, incorporated in any business that we work. So AI is an area where we see there are a lot of applications within the retail space itself, and we will be making significant investment in building our own engineering capabilities so that we can customize solutions we can implement using AI. And the future is all about a strong omni-channel fashion brands, which has seamless presence in both online and offline, which can be achieved only by making significant investment in technology part. It should be somewhere around 15-20% of the investment will definitely go into the technology part of it.
You know, we have seen that the jewelry industry, the market is valued at 3,000 crores. We've got lots of big brands globally like Cartier, Bulgari. They're looking at Indianizing their offerings to a great extent. So given that it's a very crowded and fragmented market, what is Kushal's contribution within this space? How do you stand out?
Rightly said. I mean, this is a very unorganized industry. Close to about the organized percentage would be just about 6 to 7%. So there's ample scope for growing, and we have a first mover advantage in the kind of large. I mean, large, and since we operate with 1,500 square feet store size, with 76 stores operational. So we have this first mover advantage, at least in the offline space, in terms of a chain of stores. And most of the competitors that we are talking is unorganized stores, and also a lot of players on the D2C and marketplaces.
So what are the current margins that you're operating at, and how are you looking at growing your margins?
We work our prices based on value for money, the kind of customers get the quality. So basically, in this industry, when you look, there are a lot of cheaper or lower version prices also, I mean quality products also available. We focus on good quality and premium design, and there's a value for money that we space that we work with. So we're not very premium, but we are in an affordable price zone.
So if you can just highlight your margins in a greater detail.
I mean, not be able to disclose a number on the margin side, but we maintain a healthy margin. We are a profitable organization since our inception.
Now, at present, you're operating about 75 plus stores in 25 cities across the country. There's tier 2 and 3 cities that you have a strong penetration in. What kind of growth are you seeing on your digital and on your retail platforms?
Physical, the stores, I mean, we've been the new stores that we are adding, that is giving significant say contribution to the revenue. But our same store growth also has been good year on year basis. One more interesting point we would observe is that in out of our 75 stores, we have 25 stores present in Bangalore alone. So the kind of say I mean, the opportunity that is available in the market is huge, and we are seeing equal reception in tier one cities and tier two and tier three cities also. And compared to our digital part of it, it has been growing substantially. In the last 4 years, when we started our online initiative, the contribution was around 4%. From 4%, it has today reached where the online itself is contributing 20% of our sales.
So which of these markets mainly are driving growth for you?
Significantly, I mean, our current presence is more South India based, and this coming going forward next 2 3 years is when we will be expanding in the rest of the India, where primarily we are looking at Maharashtra and Delhi NCR as a good markets to expand in the next 2 3 years.
And given that we're seeing this strong premiumization push in small cities as well, is that really propelling your growth? What kind of revenue and growth projections can you lay out?
So in the next 3 to 4 years, we are looking at having a pan-India presence. I think we would have covered all the tier one cities across India, and we're looking at a healthy growth of about 30 to 40% growth on annual basis. So I don't have an hard numbers that I can quote at the moment. But as I mentioned, the online growth has been significant. Today we are looking at 20% of the sales coming online. In next 3 to 4 years, it would be exceeding the retail number. Retail contribution. So this digital expansion will be significantly large. So it will definitely be exceeding the offline contribution. And from a retail perspective, as I said, when we do pan India expansion, the revenue growth would be 30 to 40% annual basis. We will be looking at our sales number increasing.
And are you seeing investor interest in this segment? Is there a slowdown in funding that's impacting the company?
Of late, I think we are seeing a lot of interest. From the investor point of view, there's a lot of interest in this category. One maybe reason being this category is a fast growing category. Second, most important for us, it was not difficult since we are, as I mentioned, we are a profitable company since our inception. So we were never running on an cash burning model. So as the funding winter has come in, so all investors are looking for profitable businesses and which has a good opportunity to scale profitably. So I think we tick mark in both these check boxes, we were fitting well, and so raising funds was not difficult for us in this difficult times.
All right, Manish, let you go on that note. Thanks so much for taking time out and joining in. Meantime,